Hi, this is Tom Nunemaker with the Road Trip Trade Alerts Weekly Review on January 31st. This is Sunday, 2016. So the market started out the week on a down day and up, down, so kind of in congestion, and then on Friday we had a breakout to the upside. Now I would assume that this is going to continue up, but we'll also be on the lookout in case it goes back down. So the market's pretty volatile, so it could be a head fake. We don't know. My guess is we're headed for some higher prices, but for now, let's assume up or sideways and still keep some protection on the downside. So we have two positions, the March 4, which expires on March 25, and the April 9, which is the week 2 for April. So let's, if we look at them together, this is what they look like. Now the overall position's pretty flat if you combine both positions, a delta of 3, 97 theta. But let's look at them individually since that's how we manage them. So this is the one where we started 1930, 1890, 1840, the standard 40-50 strike width separation. And the market zoomed down past our tent. We put on those debit spreads and then it rocketed back, so we took the debit spreads off. Now we did lose a little bit on the debit spreads, so I was actually in Paris, so I wanted to take them off a little bit sooner, but I think the market was about here when I actually took them off. So I could have lost a little bit less money. Hopefully you did, and but we're still in not bad shape at all. So we're down $1,100 on a $20,000 trade, or I guess max margin on this is about $15,000 right now. But this will be fairly easy to lift this side up. So if we do keep going sideways or keep going up, this should be an easy trade to recover that $1,000. And if you see this T plus 28 line, that's a 38% probability to profit according to option view. And not a bad range. And if we look at it on the birdie, this is what the area looks like. Now my guess is we're going to keep going up, maybe kind of up and down this way, but generally rising prices. And if that's true, we'll just probably reverse Harvey. We'll move this long towards the short, and that will lift up this side and push this side down. So what would that look like? We're essentially selling one of these and buying one of these, or we could just do something like this. We don't have to go all the way. We could even just do the 1900 strike. But if you're doing a vertical spread, if you go from the positive to the negative, that's the direction of the spread. So, and that works for puts and calls. So if we go from minus or plus to minus this way, we're going up, so that's a bullish spread. If we did the bullish, the long position above, we're going plus to minus, so that would be bearish. And if you look at the trade, you can see this is a if I can just isolate this. Now that's a negative delta trade, so that's would look like this. So again, bearish. But what we would want to do is go from plus to minus going up, and that creates a bullish. So that's a plus 7 delta, and that would look like this. So that's a bullish adjustment. And combining them, we would start with this, and that one adjustment would do this. And if we compare them, you see it did, let me get rid of a couple lines here. You can see it did lift this line up and it pushed this one down. Didn't change this too much, just a little bit. If we wanted to lift it more, we would just do more of these or make them wider. So we can do something like this. And you notice we're getting more positive delta when we do that. Here we're basically at the break even, or we're down, we would lose $245 if the trade expired over here. Well, actually, if we put some more of the lines on, and let's make this T plus, say, 40, where would that be? So that would be up here. That gives us a nice 54% probability of profit right around where we are, and that would look like this on the profit on the chart. So a nice wide range to make a profit. Okay, so that's how you would start lifting that up, or one way. I mean, you could do other things too. Essentially, you're building a bullish trade here, so you could do it this way. You could do 2 and 2, which would be increasing this. You would just be adding 2 of these, and again, that lifts it up. And if you compare the two, you can see they're pretty similar. This orange one uses more margin, and that's the one where we have 26 of the short 1890s. So it's nearly the same trade, but the margin's a little higher. So that's why we would probably do the reverse Harvey this way. We would go -2 up here, and maybe +2 there. And that would even make it positive. So on the upside, we couldn't lose money. The worst we would do would make $385 here. And now our probability of profit on here is 72%. So now if you look at this birdie, now we can't lose above this price. So that's a very, very wide profit range. Okay, so that's the just get rid of that adjustment. So again, just to review, this is where we are right now. Let me add another line. You can see we're very flat. So if the market continues to go up or down, it's not really a big deal. So we just want some time to pass. So this is the part that the trade, as long as the SPX is staying, say, above the short strike of 1890 and going up, then we'll just let it go. If we go, say, T plus 28, that's this line. If this one standard deviation gets down to about here, so where is that? That's, get the wand. That's 1852, and this is 1813, so that's in about, roughly 39 points. If we go up another 40 points, say to 40 points would be somewhere up around here, then I would probably start the process of raising this some more. But right now, there's no need to do that. It could still easily just reverse and come back down into this area. So we don't want to get too crazy with adjustments. Okay, so let's move on to the April 2 trade. And that looks like this. We're a +1 delta, down a couple $100. Not too bad. But we've raised up this expiration line a little bit on Friday. And again, there's not much to do. We're pretty far outside the tent. If we look at the T plus 36 line, this is one standard deviation, which is one reason I moved that up, because we're pretty far away from trouble at this point. This is a 59% probability of profit, but again, it's not going to take much just to lift this up above 0 and lock in a profit on the upside. So if we did another one of these, another reverse Harvey, see what that looks like. So that would give us a almost 10 delta, increase the theta just a little bit, and the vega. And it looks like this. So here we are, minus $41. So if we did just one more, just to see what the probabilities are looking like. So there's an 18 delta, starting to get a little bit more positive delta than I like. But you can see it's at expiration making $1,200. Probability of profit is 80% for this, and this is what it would look like on the birdie. So we have quite a large range here if we lift that up to make a profit. Now I'm not going to do that quite yet. It's probably getting time to lift it some more. We'll see what happens this week, but we're pretty far above the tent at this point. We could reposition some of this and move this forward, but for now, there's still a danger that the market could snap back because it's pretty volatile. So if you recall, if you go back and look at the chart, the average true range is on the bottom, 14 periods. So the average daily range, or true range, is 37.5 points for SPX right now. I think this move on Friday, let's see, does it have the high? Oh, there's a data box in here. Where is it? Data box, there it is. Okay, so if we look at this bar, oops, it was a high of 1940, a low of 1894, so 46 point range. pretty high. So it's definitely moving around a lot. So we're not going to be in too big of a hurry, because if it goes back another 40 points or 40, say 50 points, then we're right back down here in this area. So we'll give it some time to wiggle around. If it keeps moving up, then I'll start adjusting this up slowly and start locking in a profit. Because as time passes, these standard deviation windows start shrinking. And if I put on more lines, you can see that better. So here's, let me just do tomorrow T1. So this is a standard deviation and 2 standard deviations for 1 day of movement. So you can see it's quite large. And then if we go to expiration, it's pretty far out. But then as we get closer to the current period, you can see these windows shrinking. And that's kind of what happens as time passes. That standard deviation window shrinks and you start locking in your profit. If you're, say, up here above the tent, just start lifting that up, and it should be pretty easy to get your profit. Now another thing you could try, if you're into this, you could say, well, we're at a 1 delta. Say I want to get a little delta negative. I could short 2 shares of SPX. Now, it doesn't really look like you're doing a whole lot, but and how would you do that? You just sell 20 SPY shares, and that will give you your -2 delta. So that if you wanted to get a little delta negative for some reason, you could just sell this, which would be 200 SPY shares, and it would tilt your chart like this. So if you feel like the market's ready for a pullback, you could just sell a few shares of SPY and just, twist your chart a little bit. And here I'll compare it. So basically what happens, let me get the current price. It is 1939.80. 1939.80. So here's our current price. Now if we get rid of some of these lines, I'll just go to expiration, and I superimpose it. You can see we're rotating the whole chart around the pivot point of the current price. So we went short, so as you go up we're losing money. So this went down and these went up, and you can see it just rotated right about here. I can do a little bit more extreme example. If I do 200, I can see how the rotation is. And again, it's always around the current price. When you do this share thing, it's rotating the whole chart. Now obviously we wouldn't do this, but if you did want to make a slight tweak, that's one thing they used to do in the markets, is just get flat delta by just buying shares, and in the index you can do the ETF. Now I'm not doing that on this trade, but if you wanted to, that's a quick way to get flat on your delta. If say there's a Fed meeting or something, you're worried about it, like your delta, buy or sell some SPY, get flat, event over, close your SPY, and you've gotten through it with a flat delta. All right, well that's it for now. Again, we'll just keep an eye on the market. Futures will open in about an hour and a half, or an hour. So I'll see how it's going, but again, I anticipate the market's going to go up. One place you can go to check this is FinViz. So if we go to FinViz and news, you can see what stories are coming out and what blog posts have been published recently, and you can see if there's any news. Now, after the futures open, these are delayed, but you'll see you can just come here and look at the futures, or you can go to the Capital Discussions site, and this will update every 3 minutes. It pulls the graphics every minute, but these auto refresh every 3 minutes. So you can keep this on here during the day and see how the markets are doing. So anyway, we'll keep you updated during the week. So thanks very much. Bye.